Alright, what's up guys? Taylor here with a quick update for Tuesday the 27th of September. I'll keep it short and I'll keep it sweet. Did my deadlifts this morning. I feel like Andre the Giant went to town on me. And I got a wife coming home soon who wants to hang out and watch some, we're watching a show called The Good Witch. It's some of the dumbest shit I've ever seen. It's like it's the worst acting, it's the worst storyline. Somehow it's not too bad. But alright guys, so we have a daily chart here of the dollar. And the strength here in the dollar is definitely a driving force for the big push lower in the market. So we got the Keltner channels here. And I have them measuring 3 average true range moves. So factor of 3 above and below that 21 EMA. Now anytime something is up here at plus or down there at minus 3 ATR, it's definitely a bit of an extreme. So you'll notice not too often does something actually trade up to plus 3, never mind actually trade through it. So probabilities wise, if anything in the short term, the dollar is getting close to a point here where it's going to get a little bit tired, potentially reach a little bit of an exhaustion point, and we pull back towards a 21 EMA here. In the short term, should do the market a world of good. Should give the S&Ps and the Qs a little bit of room to breathe. Now, keep in mind, the Dixie here, in the background, you got this big weekly squeeze that just fired to the upside. So if that weekly squeeze works like other weekly squeezes, yeah, there's a good chance the dollar goes for, 4, 5, 6 to 8 weeks. But in the short term, you are up here at plus 3 on the daily. And again, any little kind of flush, any exhaustion should help out the equities market. Speaking of the equities, everything but the dollar, the S&Ps, the Qs, the IWM, Amazons, they're kind of on the opposite side of the average true range spectrum. So the S&Ps here, they're down here at minus 3. And again, not too often do we actually trade down to minus 3, and a lot more rare to actually trade below minus 3. So I think the question for now is, I do think we're going to come down and test the 200 SMA. The question is, do we head down there tomorrow and Friday? Or before we go down and test that level, can we actually see some kind of decent, eventually shortable rally? Selfishly, that is what I would love to see. But you've got QQQ hanging out down here in the forbidden land of minus 3. You've got the small caps. For now, we'll refer to them as the small craps. They're down here at minus 3. Even the RSP. RSP actually trades below that extension. So again, we could gap down tomorrow. We could go lower every day next week. But part of our jobs as traders is to focus on probabilities. We want to get long and get short. It's spots in the charts that offer good risk versus reward and a good probability of that trade actually working in our favor. So it's a tricky spot, especially for a swing trader where momentum, structure, everything on the big 3 signals says you're trying to short this market. Everything pretty much loaded up here. For now, for the path of least resistance to be to the downside. Everything sets up for a short. Doesn't mean we're trading in a good spot that makes it a good short. So signals-wise, it might be a good short. Entry-wise, might not be a great trade. So S&Ps, a couple big boys here. Got Amazon down at minus 3 with a brand new daily sell signal. All the more reason to want to short the bounce. Let's go check Microsoft. Microsoft, no exception to the rule. And then I'll probably cover this in the weekend video. But the S&Ps, the Qs, Amazons, Nvidias, Microsofts, Metas, they've got a lot of bigger time frame squeezes setting up in the background. Couple weekly squeezes, couple of 3-day squeezes, some 2-day squeezes. Everything for now would suggest there's a better chance they fire short. So we'll talk about that in the Sunday video. But yeah, in the short term, if you want to get short down here for a day trade, I think that's cool. For a swing trade, getting heavily short down here, it could work. 20, maybe 30% of the time it works. The other 70 to 80% of the time, it's kind of like getting long up here. Oh boy, the market is strong. Everybody's buying calls. There's breakouts everywhere. That's when it feels safe to get long. Everything's green, everything's strong. That's where the smart money is taking their profits. And then everybody buying up here gets trapped, and they got to sit through that flush. In the context of an uptrend, that flush doesn't change anything. You're taking damage, you're getting stopped out on the very pullback you should be buying into. So be mindful of that in a bit more of a bearish market. If you get heavily short down here, and then tomorrow you're taking a rally towards 4350 or 4400 on the chin, right on the Chinsky, you're taking damage into the very rally, you should be looking to short. But alright guys, the wife is home, so I'll let you go here. But as always, thank you for watching. Hope you've had a good week, and I'll talk to you in the next one. Adios.